Good morning, good afternoon, and welcome again to another ADM Agriculture Grain Market Update. I'm joined again this week by my colleague, Freddie Humfrey, and we're just going to have another quick review of the wheat markets. Towards the end of May, we saw quite a considerable sell-off, but that trend's been reversed as we move into June, with Chicago wheat futures rallying, well, just over $20 in the last few days. Weather in the US has turned from being beneficial back into hot and dry. And in addition to these fresh weather concerns in North America, I think we still face some underlying issues with corn production in Brazil. Certainly last month, the USDA were working with a revised crop figure for Brazil of 102 million tons. And that is still a lot higher than a lot of other analysts. There's an increasing number of private reports calling the crop below 95 and even below 90 million tons. And if that figure is correct, if it is below 90 million tons, the global S&D grain in general has a real problem. But we thought it might also be interesting to have a look at markets a little bit close to home from a technical perspective. So why don't we start with December motif? Freddie, how are you seeing things?
Yeah, thanks, Jonathan. So as you just touched on there, from a long-term perspective, there's some fundamentally more bullish factors in the market. We thought it would be quite interesting just to look at the technicals because it gives some short-term ideas which are quite interesting. So as we all know, in April we saw a nice big uptrend, pushing wheat prices globally to higher levels. That topped out at the back end of April. We saw a little pullback. It then tried to push again and failed at that high. Now, in terms of those high numbers, 232 on the December motif level was absolutely key. And you can see that pullback and then the retest there on the charts. Now, that retest failed. We then reverted into a downtrend, which Jonathan just touched on, and it pulled all the way back through to that 203 level, which you cast your eye to the left-hand side of that chart was a real level of resistance back in earlier periods in Jan, Feb, and March. So we got to that level, found significant support at the middle of last week, and in that process, the support broke the downtrend. We've now just moved into a short-term uptrend, as you can see on the right-hand side of that chart. We've pulled all the way back up to into the neckline from the double top from earlier on in April and May, and we're in and around that 217, 218 level, which is absolutely key. To be testing the highs again, getting back to 232 euros, we really need to break this neckline resistance, and push on with that uptrend in the short term. So at the moment, what I'd say is short-term uptrend coming into a level of upside resistance, and subsequently that uptrend needs to either break the resistance, or the resistance needs to hold and break that uptrend. So we're in a real key situation on the motif debt contract at the moment on the daily side. And
what about London wheat?
Yeah, so I mean, to be honest with you, it's a bit of a reiteration of the deck motif contract. You can still see the same pattern, that double top formation with the pullback and then the high test again, then the downtrend that we saw throughout May. Now, in terms of the numbers, obviously on the deck motif, it's 203 euros. On London, it's 173 euros. You cast your eye to the left-hand side of that chart again, and we see that what was resistance back in Jan, Feb, and March at that 173 level, it's now become support. We tested that support last week. We actually traded at 169.50 on the intraday, but we failed to really get any traction. So that downtrend that we saw throughout May was broken. 173 proved too much of a support level, showed too much buying interest, and we're now, just like in the motif, in that short-term uptrend. Now 182 here is the neckline for the double top. We actually touched that in trading yesterday, saw a significant pull off back to the short-term uptrend. So we've got exactly the same picture: short-term uptrend, testing that high resistance at 182. So I think in the short term, the key levels for London NOV 21 futures on a daily perspective are that support in the low 170s and the overhead resistance at the low 180s. So we're right in towards that upper end, right at the second, John. So quite an interesting market from a technical perspective.
Yeah, that's great. Thanks, Freddie. I think, both from a technical perspective and from a fundamental perspective, we've got a very interesting setup as we go into harvest. We've got all of the weather issues that will come out of the US as we go through key growing stages with US corn in June and July, and that's going to be the ultimate driver of wheat as we go forward over the next 3 to 6 months. So an interesting market setup for sure. Thanks for that, Freddie. If you have any further questions, please get in touch with your ADM farm buyer, or alternatively, as always, our contact details are available at the end of the video. Thanks very much again for tuning in. Speak soon. Thanks, Freddie.